Welcome to Trading Lounge and the Australian report for Thursday, November the 3rd, and just starting with the S&P here because we've got we've been talking about a top for the S&P and that the A wave, the B wave, 1, 2, 3, 4, and then 1, 2, 3, 4, 5 here. So it kind of fits quite nicely. We don't have 5 waves down here just yet, but that's what we'll be looking for in due course. So yeah, we just don't have it yet. The same with the Australian market. If we do get these 5 waves here, then what we'll be looking to do would be to short the corrective rally over here on that side. So we need some evidence. The spike here, I kind of tend I know it's probably not the right thing to do, but I tend to kind of ignore the spike so I can get the count right. But in a nutshell, we still need to see 5 waves down here at this point to confirm that we've got a top in play here. This particular move here, when you look at it as an A, B, and then 1, 2, 3, 4, 5, it's okay. The wave 2 is a little bit sort of awkward, and we could apply this same count to the Australian market in that it would be the same as this here. So from the low here, we've got the A wave here, which would be the same as the A wave here, and then the B, and then the 1, and the 2, and the 3, and the 4, and the 5. So the B, the 1, the 2, the 3, the 4, and the 5. We're still 1 wave short here, and this is what I wanted to talk about for this. So as a bearish pattern. So we can talk about the bullish pattern if this recovers and gets support back on the 7,000, the bullish pattern that we were talking about yesterday. In this move up through here, it's pretty clear we've got 1 and 2 and 3 here, and now we're just coming down to overlap on top of wave 1, well, sit on top of wave 1. So we can see the stochastics pulling back here as well. What we need to do is we need to figure out what we've actually got here, because if this market continues down any further here, then we'll need to pull this, like the US markets, we'll have to pull the top in over here for this as wave 5C of B at that point. So then we'll need today to see where the banks are. So if the banks are going to roll over in line with this, then we'll see the resources probably crank up a little bit, and yeah, so that's that. So basically, I don't have 5 waves up here. It hasn't finished properly in that regard. I've got a nice 3rd wave here. We could look at this as the 4th, but there is overlap there. So we today would need to see that move straight up, straight up here. Now that's from the top to the bottom. That's the 50-60% retracement level, so it could just go to there and then come down again. So we'll need to be a bit mindful of that. So first of all, we need to confirm that the US has got 5 waves down here. I think it's going to be the case, even though it's not confirmed, and the reason I say that for is because of well, Apple, Google, and Microsoft, some of these big tech stocks. So you can watch the video for that and get some idea of yourself how that sort of plays out. We still need to confirm the US dollar moving higher as well. That's something that's on the cards. So we're basically stuck with this particular pattern here for the short term. Okay, so this is exactly how we've counted the S&P, with the A, the B, the 1, and the 2, the 3, the 4, and going up for wave 5 here. But like I said, it just hasn't finished properly. So just to recap, if we see a move come down further, then we're really overlapping that, and we'll have to put a top in play at that point. If this moves up here, it will need to make a new high up here just to give us this wave 5. And even if it does give us that wave 5, that could also be the top at that point there as well, and then come down from that point. So we would need to see this play out here as a as a bullish pattern across this level here. Otherwise it can come down from this point. So yeah, one of the other points that we could work with as well is that sometimes if we're in a bear market, then it's really all about the Friday. It's Thursday now, but if we see Friday and Friday morning and Friday afternoon moving down in a bearish mode, well then we also know that we've got a top in place, but we need to get through Thursday. So we're going to see the banks come off, so it's highly likely this is going to come down here further. So then we kind of got to figure out how do we count this with the spike in here, you know. So what we've been doing in the US is having a look at this particular sort of pattern here. In the US, this little spike here has taken out the top here. It didn't happen in the Australian market, so we can look at this here as 1 and 2 in here, and 3 here, and 4 playing out, and 5 coming down in that regard, and then that would give us a wave 3 at that point, and then a wave 4 here, and then a wave 5. So if we got that pattern there, then we would need to look at this as wave 1 here, and then wave 2. So this is what we're looking at with the US, and if that's the case, then we'll need to short it at that point. So we'll look to short it on this bounce off this support area here. There'll be some sort of ABC pattern coming into play, and then it would come down after that. So this is where we would look to short it, coming into this area here, or if we can evaluate 5 waves coming down, then we'll need to look to short it over here. So that's really where it's at the moment. So we just need to see what happens with the S&P 500, but we can just have a look at this in a little bit more detail here. So with the 1 and the 2 here, and then the 1 and the 2 here, and I'm not quite sure about this really. I mean, 1 and 2 here, I don't know if I need to do those 1, 2, 3, 4 here, and then down for 5 here. You know, I think that's the case, but we'll just see what Thursday delivers a bit. I just want to see how the dust settles after the Fed's comments as well. Obviously the Australian markets will also be seeing lower bond prices and higher yields as well. So if we look at the Australian bond yields here for this, I think, you know, from this wave 4 that we've had here, pulling back to this wave 4, I think we've got 1, 2, 3, 4, 5 here. Now, I thought that we may have that as the top, but really it's a little bit it's a bit small to take out that top. So the rates in the US are now at 4%. So, you know, I think that we're going to follow that as such, and they might ease. You know, I think ours is on November the 30th, isn't it, or November the 20th or 30th, I think, for our next RBA meeting. But if this is right here, we'll have 1, 2, 3 here, and just clear that out there for a moment. That would be 1, 2, 3, 4, and 5 here, because I think the Feds will, my thinking was that where are we here? 4, 5, 5 of 3 here, and then that would push up there further, and then we would have this wave 4 here would be quite significant, hitting 5 being the second strongest number, because I think that when the Feds have their meeting next time, I think what they will probably do is they might ease rates a little bit, you know, maybe do 50 basis points rather than 75, but they will continue to kick the can down the street because of the way the economy is sitting at the moment. And you know, they really, you know, they need higher inflation to pay off their debt. That's the only way they can do it. So the inside news on that is that, you know, they're targeting 2% inflation, but they're just not going to get that. They're going to be sitting at 3 and 4% at the end of the day. So they'll kick it up to 5, I reckon, and then they will ease it at that point. Then they'll realise that that's not working, and then they'll continue their campaign again and push it up. But there will be a larger softening at this level here. But far as all the other central banks are pretty much synchronizing with what's going on in the US, aren't they? So we can expect more rate hikes to come in that place. So if we're going to get more rate hikes here, then that's going to put the bond market down. The bond markets are in pretty much sync with the stock market at this particular point in time, so that pressure to the downside is just going to play out. But in terms of day trading and all those sorts of things here, I think that, you know, with a trend there's a beginning, a middle and an end. So the beginning would be the 1 and 2 and the 1 and 2, and then this is into the middle here. So we need to get to the end of this over here, I reckon. And then what we'll do, if we've got this correct here, then we'll look at this as being wave 1 and wave 2. So the short trade will come in over here for this. So if I'm wrong and the market's going to be bullish, well then we'll just see this come down to wave 3 here and then push up at that point. But even if it pushes up here, then we still need to do more work to find out if that's going to be the top there and so on, or do we just need to force a top in here? If we get 5 waves here, you know, I mean, if we come down to this level here, then we'll have to call that a top in here because there's too much overlap at this point. So that's where that is. So it's probably likely that we've got that top in at that point there. That's what I'm thinking. But all we will need to do as traders is just to justify 5 waves coming down here, and then there'll be a rally, and then we can look to go down further at that point. It does mean that the banks can also be in the same situation. So CBA is strong, and yes, it could go further, but it could also stop here as well. So when we have a look at the other banks, let's just go and have a look at those first. So back over to here, and then I'm going to just squeeze in here that, so you can see what we're looking at here. Well, first of all, let's have a look at the XXJ. So the XXJ, we were looking at this here as well, an A and a B and a C with 5 waves up here. A little bit tricky to see in here, but we can see we've got 1 and 2 here, and 1, 2, 3, 4, 5 here. So then we've got 1, 2, 3 here. So there might be another little 4, 5 in here to finish that off, but that's pretty close to be finished off. The materials sector, I just want to have a look at that. So the materials sector, if the banks are going to go down, then this move here, we've got 1 and 2 here and 3 and 4 here. I mean, it's humongous wave 4, but all it needs is to do is have one more. It needs to take that high out here. So it might just go to that high, anywhere between that high and that high. That's all it needs to do, but that's enough for the banks to go down at that point, and then this can come down at that point too as well there. But we're not worried too much about the materials sector at this point in time. We're just looking at the XXJ having 5 waves up here, so we need to take that to the banks. And so we haven't looked at WBC for quite some time. So with WBC here, where are we here? So we're still a long way from the top here. So certainly we talked about it all being bullish yesterday, and that's okay too, but the thing is that if we're going to be bullish, as I've sort of drawn here before, I think, so we've got 1 and 2 here, and we've got the 3rd wave up here, and we've got the 4th wave in here, and then we've got the 5th wave up here. So what we're looking for is a top in the banks, and then a correction here. Now the correction, you know, might not be like that. It might just take us back down through here in line with the S&P. But if that was going to be the case, if we're going to go long, we could go long above this one here. So we probably need to look at this as wave 1 and 2 here. But yeah, we can look at it as an A and a B and a C, and then go up from that point. So where do we short this from here? I mean, you could pretty much short it on the open, I reckon. We've seen US banks. So with US banks, I'm just looking at WBC here, the Bank of America, and I don't have a nice clean 5 waves down here just yet. There's a bit of overlap between this high and this high to look at this as, I mean, there's definitely 1 here and 2 here. I don't know if that's 1, 2, 3, 4 here, and then coming down for 1, 2, 3, 4, 5, and having another little move down here. But the same thing applies here. What we're looking for is when this lands on a nice support, we're looking for some sort of corrective rally that we can look to short at that point. So I think that I think this is what could happen to these banks now. right? So that means that Westpac, for example, there is a pretty clear 5-wave structure up here. It's a bit short on the 5th wave, but this one here was only 1, 2, 3 days, and we're already been here, well, half a day there, 1, 2, 3, 4 days. So, you know, it's kind of enough really for that, you know. ANZ is in its own little thing. We've been looking at this too, but a little bit shaky to look at this point. So yeah, not quite sure about that. But getting a small position above the level and then adding under the level here, but it'll probably just drop a bit anyway on the open. Bendigo here. So with Bendigo here, we're looking for 5 waves up, 1, 2, 3, 4, 5. So I'm not quite sure about how that's in there with that. I'll just check on the NAB. Yeah, well, the NAB's the same as well, really. We've got that wave 1 and 2 here, and I've probably got 1 and 2 in here, and 3 and 4 here, and then up for 5 here, and then some sort of 4th wave here with 1, 2, 3, 4, 5 in. We're pretty close to a top here as well. You know, it's struggling. It was up yesterday on lower volume, so that's something. So to go short under this one here and put the stop on top could be the go with this. So anyway, the banks are at that particular point. Now this particular one here hasn't really started to move up, but this would also be a short if this low came out here. That would have to be shorted at that point. That would be a total breakdown, because if that broke, then it was likely to overlap here, and then we'll just be left with 3 waves up at this point. We'll see how that goes, you know, but just to let you know, if you were long in this, that's where the stop would also need to go as well. So that's the banks. So just, even though we're looking at them bullish yesterday, and that's fine, but now we're looking at them in a bearish light, so we need to take that on board. And that means that if the banks do go down, that means that the resources can rally a little bit. But let's just have a look at how things are going. So iron ore here was a little bit positive, moving up there. So we'll see how that plays out today. And let's just, we noticed nickel was moving up yesterday, didn't we? So I'll just check copper. Copper was down a bit overnight. We know that copper's going into a bit of a triangle pattern, so it's sort of sitting there. So there's not much to view here with copper. I should open it up a little bit further, but it's basically in a bit of a triangle pattern and then going down. So I don't see so I don't see this. I can see our resources rallying, but not very far, you know, based on at least copper here. And we know that iron ore is pretty weak, and China's not doing anything about anything at the moment in terms of all of that. And yeah, we'll have a look at lithium and uranium in a moment. I just want to have a look at nickel. I know that's not too far from my watch list here. Yeah, so nickel's pushing up, so that's we noted that sort of we've been talking about that since we've labeled this wave 1 here and 2, so that's pushing up. But they'll probably just come up here and have, you know, the time that copper and that finishes its triangle and stuff, then they'll probably come down at that point. But I'm happy to go long further, but we need to count those past 5 waves up here. So there is a bit of strength on the you know, on the resource side. So we're going to see those rallies come in. And same with Rio here. We're going to this is a 61.8%, so we'll see how that plays out. We'll see FMG come back as well. It's not really rising on strong volume here. It's a fair bit of volume, but each volume bar is less and less and less. Well, based on this one anyway from here. So it is moving up on lower volume. So that will come down today, actually. That will come down. Yeah, they'll all come down. Yeah. Sorry, just checking my own brain here. Just, yeah. Oh, that's ETH. So what's that doing there? Okay, so lithium here. So this is just an ETF here called LIT. So the thing is that if this is corrective here, the only way I know that this is going to be bullish is if 70 becomes the support, because that's the wave 4 of 1 lesser degree. But I don't know if that's the wave 4. Wave 4 could be over here as well for this, because it's a bit difficult to count this and a bit difficult to count this first little bit in here, so that it could be a mistake made easily at this point here. So if we get support here, then that's fine. And this could be, I can see how we can count this in both directions here, but it was down overnight, so we're going to see lithium down as a ETF on the US market. So we're going to see lithium stocks pull down today, and they could pull down further. They could pull down, you know, and make another low in here before coming to the upside. So, you know, this is still, I'm not free of this just yet. You know, this can be over here for this. We'll see how this plays out here. I mean, it's a fair bit. I mean, I can see it in both ways, you know. So I can see this as an A wave, a B wave, and a C wave to here, down for 1 and back for 2. Or I could see this as 1 and 2 here, 3, A, B, C, correct triangle pattern here for 4 and up for 5, and then the A, the B, and the C wave here with 1, 2, 3, 4, 5 coming down here. So 3, 4, 5, and then coming down here a bit further, and then pushing up here for that. You know, I can see it in both. I can see both sides of it, and I'm on 1 tick here, so I can't get any closer into this. I mean, I can do this, but that's that can be a bit helpful. But yeah, I mean, it's just splitting hairs really. So the 70 is my saving grace on that, and uranium's also going to come down a bit further as well. I can count this up as 5 waves, or I can count it up as 3 waves as well here. So yeah, so if this is going to come down a bit further, we'll have to take a look at this as 1, 2, 3, 4, 5 and a correction, and then 1 and 2 and 3 and 4 and 5 coming down. So it can come down a bit further below the 61.8% mark here. It could also, this could be counted correctively as well. You can count it as 1 and 2 here and 3 here, and ABC for 4 here, then 1, 2 and 3 and 4 and 5 up here. Or you could count it correctively as an ABC for the A wave, a B wave, and a C wave. So it's got overlapping wave structures a bit. So yeah, we've had that long trade here. I suggest that you get rid of that now, because this hasn't held here, and that's why I put it there for that. And let's cruise along and have a look at those lithium stocks for a moment as quickly as possible. Won't burn up too much time, but we'll start with SQM as we do. So it's moved down. What we were looking for with SQM is we're trying to understand if we get 5 waves up here. We'll need a classic trading levels pattern, and then we'll go long at that point. So anyway, we'll see how that pulls back. It might just pull back 50-60% and then push up. So we'll look at the intraday, but for the time being, we'll increase volume to the downside. So we're going to see that come down further. And the same with ALB as well. We don't have 5 waves up here. We only have 3 waves up, so that's not there. Lace is another one as well. I did have that sitting on the top there, but I'll just bring it down to this point here. Don't have 5 waves up here. It's more like it's 1 and 2, and then 1, 2, 3, 4, 5. So it's still corrected. We still could come down further in here, and probably will, depending on how, if lithium comes down further, then we'll end up being like that for that. PPPLL, one that I liked yesterday, and we'll see how this pulls back. It's come down on lower volume, which is a good sign. We'll see if it sits at the 50-60% retracement level, and we'll take a look at that pattern. Over to Australian, the ACDC here. So this was up nice and strong yesterday. So it still looks quite bullish to me. I mean, it could be a B wave up here, like an A wave here, and then a B wave to that point, and then a C wave to come down and then up as a A and a B, and then 1, 2, 3, 4, 5. So it'll be interesting. The other bullish side is 1 and 2, and then 1, 2, 3, 4, 5. So we'll just see. It's going to sit around the 90 here for a little while. You know, that strong volume needs to be flushed out if there's going to be any more bearish profit taking coming in there. But if it was going to be bullish, it would basically be coming back to the wave 4 of 1 lesser degree in here somewhere, and then having that, and then there would be this pattern here to go off, and then we could go along at that point if that was going to be it. So I'll put that over here. We don't need to add to that just yet because of what's happening in the other lithium markets. CXO, Once again, here too, we've got, it's hard to count this up here. I could go 1, 2, 3, 4, 5. We have an A and a B and a C coming back here, so we'll keep an eye on that. But in terms of a classic trading levels pattern, we've got the arrival, the reaction. We'll still need an A, B, C here, and still need the first high above the level. So there's a long way to go here yet. So we don't really need to get into that at the moment. But we'll just see how this plays out here. It came down on lower volume as well, so that's good at that point. And Liontown here. So with Liontown here, we want to we will also want to get 5 waves up as well. As I mentioned, we've got 1, 2 here, 1, 2, 3, 4, 5 the third wave. So this is probably a 4th wave, and we'll find nice support on top of that 180 area there. And then we'll have the 5th wave up. And even when we get the 5th wave, we still have to wait for the ABC over this side. So we've got weeks before that's set up to play out. And PLS, yeah, we'll just see how that plays out. Still just vibrating here. The longer that you leave these things, the better off you are, the more mature they are. AKE, that's coming down. We're going to go long above the top there, but we kind of recognize it as a B wave, so we're looking for it to come back. So it's doing all the right things and not really displaying a nice impulse wave down, I have to say, but still. IGO, so we're looking for this to give us some sort of ABC there, and the same as MIN as well. Here we counted 5 waves up here, so we're looking for a pullback in all of that. So that's where that is at this point. And going over to US spot gold. So with the Fed's comments, it had a bit of a spike around, and yesterday we noted that, well, first of all, we had 5 waves down here, but we also noted 5 waves here. So we're looking for another move up. So that's come into play. Now, this here will be 5 waves coming down. There's going to find support over here, so there's going to be a retest of that 1650. Yep, so when it does that retest, you want to find the little ABC in here, and then you can look to short that. This move is corrective, and you could look at it as the A wave here, then the A, B, C for the B wave, and up to the C wave. And now that that's come down and taken that low out here, it's corrective. So basically you want to sell it, or you want to short it when that comes back up into that as a retest there. Okay, so give it a session, and you can look to short in that space, and we could just give it, find your 50-60% and wherever that may be, and paint the town green, so to speak, at that point. Don't overdo it, but doesn't hurt to practice getting in at exactly the right point, but just do it with a very small amount. So you because it's more important to play the game than to sweat it out by putting too much money in there. So yeah, so look, if this is on its way down, which looks like, well, then we're going to see this down as well here. So this will probably need to be put back over here, and this will be put here, and I'll just put wave 1 here for the moment, but it will be probably something like that. If you wanted to short that under here, it's a bit of a risk, but get you in a bit early. We'll make it very small, and because we can see what's going on with US spot gold, plus the market's weak as well, so that's all good for that point. So, and then just the stop goes above the top here, so 1 point above the top, and 1 point below this low here, whatever that is. Okay, so that's that. The Australian dollar. So we've been looking at this move here as wave 3 with an A and a B, and then looking for this move up here into the 65. So that's there, and then we looking at this move down here. We decided to go short under here because it was possible to count this down as 5 waves here as 1 and 2, then 1, 2, 3, 4, 5 the third wave, 4th and 5th. So we could put that 1 under here. We had it as an ABC as well. Lift the A, the B and the C up to here. Probably need to put this B over here, but it doesn't really matter too much. In fact, I'm just going to move these out of the way so we can see a bit clearer. So yeah, I mean, if you you know, later on, I mean, that's where the short should, I mean, it's hindsight, but that's where the short should have been at that point. Like under that low, lifted up to that low, lifted up to the next low. Now you could have gone further if you could have recognized that that was 5 waves up here, 1, 2, 3, 4, 5. So you could have done that, but there's fine. But anyway, if you're short here, that's fine. That's where that needs to go. The stop needs to go out of the way up at this point here. This will just be following the S&P 500 down, but just be a little bit mindful about the US dollar index here at 112, because that's at 61.8%. It's going to stall here for a while, so we need it to see how it stalls, and then we need to see if it's going to push up past that. Well, looking at this as a wave 4, I can rule the wave 4 out now, because I've got 3 waves here. We looked at it as 1 and 2 here, but I could also look at the whole thing as a B wave to here, an A wave to here, and a C wave now over to here, because I have to eliminate all the bearish counts. So that's wave 2 here at the 61.8%. So once that gets taken out here, then we'll see a stronger US dollar, and if that takes that top out there, that's also going to confirm the bearish move for the S&P 500 and the Australian market and all the rest of it. So getting a classic trading levels pattern of support on this number here would verify that the US stocks and indices are in bear markets, and this is in a bull market at that point. So I've just been eliminating everything, and you know, yeah, so my original situation of wave B here and wave C coming down in 5 waves is playing out reasonably well. I just had to look at everything else at that point. So, but see, we're not, you know, it's not over until the big lady sings. So let's just wait until we hear that voice. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.